Hello everyone, welcome back to another trade recap. I'm going to go over how I made $1,800 a day trading the NASDAQ with the one setup for life. Clockwork. Looking at this here, we have the 1 minute chart going long inside the inversion fair value gap and covering here at the high for about 45 points, and then across two accounts gives you a pretty decent payday for a morning's work. So let's go ahead and take it from the higher time frame, work our way down, and then we'll be able to see why this works. Again, I know you're seeing the 1 minute chart execution, but the real sauce is not on the 1 minute chart. It's actually what's happening top down. First things first though, before we actually even get into the price action, let's look at the economic calendar. So I made a video for you guys yesterday covering high versus low probability trading days. How do traders know when it's going to be good? And how do you also know when it's going to be bad? In terms of price action, covered all that in great detail yesterday. Tuesday, Wednesday, absolute chop fest in the morning session, brutal price action, gambler's playground. While Monday and Thursday price action, very clean because of these factors here. So high impact news, urge you to go watch that video because it's going to be an insightful one. High impact news here at 8:30 means we're going to see good volatility, clean price action, which is exactly what we need as smart money traders if you want quick entries, right to target, zero drawdown. That happens on low resistance liquidity run days. So going over here to the charts, let's take it from the top here on the weekly. So weekly chart, we're aiming for the buy side here. Looking for these equal highs, new all-time highs. Down close candle. This is a bullish order block we were watching on the weekly outlook. You'll notice we dropped down. We made the low of the week inside the upper quadrant of that level. So that is extremely bullish. So we dropped down into the down close candle, used it as support. That's signaling that the market is going higher. So we have equal high here, bullish order block, used as support. Working down into the daily chart. Right out of the gate, bullish all week. So on Monday, we opened with a nice gap down, cleared out the sell side, market displacing higher, working above this high. And again, we're aiming for the buy side back here. This gap here is an inversion gap because we're not expecting it to trade up into it and sell off. We want to see it get above it, use it as support, and expand higher, right? That's what we saw here today. On Wednesday's trading, we got a strong close above that inversion fair value gap. And then you can see on Thursday, we opened, made the low of the day, expanding higher. What I want to do now is zoom into this price action here so you guys can see what we were using as intraday targets here today. All right, so you can see that daily imbalance, which is an inversion fair value gap now, but I want to take your attention to this small volume imbalance here. A volume imbalance is the separation between two candle bodies. It's not a liquidity void because there's wicks there, so it's been traded through, but it is a volume imbalance. It's inefficient because it hasn't laid a body over that range. Because again, we understand that most of the volume is going to be in the bodies. If there's no bodies over a certain range of price action, that's going to be an imbalance in volume. So that's going to be a key level there. And then through that, we have this void here, right? So where we gapped here, if you see that there, that's a void, and that is going to be the next draw liquidity. So looking at the daily chart, the draw we had this morning was that volume imbalance with those two black lines, and then through that, we have that liquidity void, then eventually we have all-time highs at the 780 level. So let's drop right down to our 15-minute chart, get right into the business here. So we have our 9:30 opening price. When we're bullish at 9:30, we expect a Judas swing or a manipulation. Why? That's going to get retail short, and anyone that's already long is going to be stopped out for the real move. Smart money traders, institutionally minded traders are looking to buy markets that are dropping, and if it's dropping below the opening price and into sell stops, easy money. 9:30, they sink it into sell side. When we're bullish, that creates the low of the day, buy side here, and then that volume imbalance with the two black lines, and then we have that daily liquidity void above market price. All right, 5-minute chart here, just a bit more detail. See 5-minute chart, they leave this high here, they sink it lower, take out this pre-market low here, and then the London low. So this technically isn't a London low because it doesn't form from 2 to 5 a.m. But if you look at it and apply some common sense, at 2 a.m. we just started running higher. So where's the obvious equal lows or swing points where retail is going to put their stops? And that's going to be below these relatively equal lows here. So it's going to have a lot of liquidity below it because it's where the big run originated from. So at 9:30, here, let me bring that over here. They sink it lower into the pre-market low, but also the London low here. That makes the low of the day also dipping below the midnight opening price. That's creating a really nice discount for smart money to go long. From the opening price, displacement higher. Best longs are going to occur below the 9:30 opening price, dips into a 5-minute gap. Buy side here, daily volume imbalance. Then we have this level up here that the market's going to want to reach up into. All right, 1-minute chart. This is where the magic happens once you understand the higher time frames. Let's get the executions put back on here. So you see 9:30 here, the market opens, it drops, This is an opening range high. Why is that important? Your swing points that form from 9:30 to 10 o'clock are going to be extremely significant because of the amount of volume that's coming in at that time of the day. So if that's the highest high that's formed since 9:30 and they dropped it, there's going to be a lot of buy side there because a lot of retail traders are going to chase the market short. And then where are they going to place their buy stop? Above the most obvious high. And that's going to be this high at the opening range. You can see the exit there perfectly. So we drop lower, sell stops taken, sell stops taken. That's a Judah swing. The first thing we need to see for my one setup for life model. And then we see a change in order flow. We see this up close candle and this small fair value gap here violated. That's all you need. So from the bullish order block here, the market trades higher into this inversion fair value gap, which is also the first presentation. Very important level to have on your charts. Very helpful when you understand the narrative. So we're not expecting this to act as a traditional fair value gap. We want to see it act as an inversion. Why? Because the market is bullish. When it's bearish and doing the Judah swing, the market's in a sell program. It's seeking lower prices. When the market shifts bullish, this level is not going to be used to send price lower. It's going to be used as an inversion. So you can see I'm going long here in the lower half of that to get a really nice discount entry. Also buying inside this up close candle, which is a bullish breaker, right? Because we have a low, lower low. So high, low, higher high. That's the bullish breaker. I'm going long as it's leaving it because many times when the market is really bullish, it's not going to come back down for the breaker and it'll just keep running. So that's why I went long here, covering above the high. And then you can see the 2-to-1. So going long right here in the low end of the inversion fair value gap, stop here below this gap, and then targeting a 2-to-1 with the opening range high here. Why not hold for the pre-market higher that daily volume imbalance here, which is the two black lines? Excellent question. So because I just had one contract, I want to make sure I'm getting the trader paid. 45 points across two accounts, about a little under 2,000. So I'm very happy with that for the day with just trading my low size with just one mini. If I was trading 2, maybe 3 contracts, what I would do is take an entry here, cover one above the opening range high, and then let a runner go either to the pre-market high here or to that daily volume imbalance here. And you can see from here, the market, after reaching that daily volume imbalance, really nice high there. Market drops, clears out the sell stops, running higher, and then we're looking for the market to trade up into that daily liquidity void from the daily and weekly chart, and then eventually all-time highs at the 780 level. Hope this one was insightful. If you want to watch a full breakdown of this trade, candle by candle, from the pre-market analysis all the way to the execution where I'm banking, join the free Discord and you'll be able to see that full breakdown in our education channel in the link below. Hope this one was insightful. Time to hit the beach. Been a long day. See you on the next one.